Internet computer, ICP. Look, depending on who you ask, this is either one of the most wildly misunderstood blockchain projects in the world, or it's literally one of the biggest missed opportunities in crypto history. The polarization right now is just extreme. So why exactly are some investors calling it the absolute future of the internet, while others think it's just never going to matter?
Well, that's exactly the core question we're answering in today's explainer. We're tossing out the crypto tribalism, the loud social media noise, the hype, all of it. We're going to objectively look at the hard facts, the underlying tech, and the actual tokenomics. We need to figure out what's really happening beneath the surface here and see if the current risk-to-reward ratio actually makes sense for a rational investor.
Here's our quick roadmap for this explainer. We'll start with the vision and the tech, move into network usage and tokenomics, break down the ultimate bull case, look at the competitors and the bear case, and wrap up by evaluating the investment. Let's get into it. Section 1. The vision and the tech. Redefining the blockchain.
To get why ICP is so fiercely debated, you really have to understand that it operates completely differently from your typical blockchain. I mean, it actually wants to be a decentralized cloud. Take their reverse gas model, for example. On pretty much every other blockchain, if you want to, say, click a button, like a post, or send a message, you, the user, have to pay a gas fee in crypto. Imagine if Gmail charged you 5 cents every single time you hit send. Crazy, right? But that's the standard Web3 experience. ICP flips this completely. Developers actually pre-fund their smart contracts, which they call canisters, with computation fuel known as cycles. Because of that, users can interact with these decentralized apps seamlessly. It feels exactly like a normal Web2 website, no crypto wallet or tokens required.
The contrast here is just massive. With Ethereum and most other chains, the user pays, which creates this huge wall of friction for onboarding everyday people. But with ICP, the developer pays. This basically strips away all those technical barriers that have historically kept mainstream users totally locked out of crypto. It brings the user experience perfectly in line with what we already expect from traditional tech platforms.
So ICP isn't just acting as a ledger for financial transactions. Its smart contracts actually host the full front-end web interface and the back-end logic, all entirely on-chain. Plus, through a tech they call chain fusion, it natively integrates with networks like Bitcoin and Solana without relying on those super vulnerable cross-chain bridges we hear so much about. And get this, it even has the capacity to run artificial intelligence inference models directly inside its smart contracts. The ultimate ambition here? It's not just to compete with Ethereum, it wants to go head-to-head with centralized giants like AWS and Google Cloud. Which begs the question, can a blockchain really compete with the big cloud heavyweights?
Right, let's look at the numbers. Section 2. Network usage and tokenomics. The data behind the claims.
When we look at the fundamental metrics, we're seeing a network that is objectively experiencing massive activity. As of mid-2026, the network is approaching a staggering 300 billion total transactions, and it's sustaining an incredibly high throughput of over 6,700 transactions per second. We're also looking at over 58,000 registered smart contract canisters powering these apps. But, and this is a big but, as an analytical investor, you always have to look at the bottom line. Even though revenues are up and expenses have dropped significantly over the past year, the network is technically still operating at a financial loss. Most recently, they reported a $20.6 million quarterly shortfall.
So how exactly do they plan to fix that bottom line? Well, enter Mission 70. This is a massive overhaul of their tokenomics designed to slash ICP's token inflation rate by a whopping 70% by the end of 2026.
To pull this off, the network is basically shifting from a fixed subsidy model to a usage-based economic framework. Here's how it works. As the cloud engines generate revenue based on actual enterprise compute demand, 80% of that revenue goes straight to the node providers, the folks running the physical infrastructure. But the remaining 20%? That's used to buy and burn ICP tokens. So does network growth actually create value for ICP holders? Well, this mechanism is explicitly designed to ensure that it does, creating a deflationary effect that scales directly with real-world enterprise usage.
Let's explore the upside. Section 3. The ultimate bull case. Why ICP could re-rate.
The bull case here relies heavily on this really explosive intersection of AI and Web3 infrastructure. Proponents constantly point to Caffeine AI. This is a platform on ICP that lets users generate fully functioning, decentralized apps just by typing out natural language prompts. Think about that for a second. A self-writing internet. Combine that with the upcoming GPU nodes for decentralized AI training, and ICP positions itself as a definitive leader in the whole AI crypto narrative. And financially, bulls will argue that sitting at roughly a $1.56 billion market cap, ICP is essentially priced like a secondary asset. That leaves a massive runway for upside if it manages to capture even a fraction of the market share currently dominated by networks like Ethereum or Solana.
And to capture that heavy-hitting enterprise money, ICP uses something called the Swiss subnet. Because ICP is built on a subnet architecture, it can actually create geographically constrained, permissioned sovereign clouds. In plain English, the Swiss subnet lets regulatory-conscious institutions use decentralized infrastructure while completely guaranteeing their data legally never leaves Switzerland. Bulls argue that this is the exact kind of compliance-friendly tech that is absolutely crucial to finally bring traditional corporate capital on-chain.
But we need to look at the other side of the coin. Section 4, competitors in the bear case, the prosecution's argument. Okay, take a look at this. Analysts call this the technical and application inversion, and honestly, it's pretty glaring. Look at the performance stats. ICP boasts these incredible transaction speeds and blazing fast 1 to 2 second finality, completely blowing Ethereum out of the water and even edging past Solana in throughput. But look at the total value locked. Ethereum has tens of billions, Solana has nearly $2 billion. ICP? It has a mere $120 million. So it clearly possesses massive technical superiority, but it completely lacks the liquidity and developer mindshare that actually drives crypto valuations today.
And beyond just the lack of adoption, there's some really severe structural criticisms we have to talk about. Justin Bonds over at Cyber Capital points out that ICP's architecture relies on independent subnets that lack the shared security you'd see on networks like Polkadot. Because some of these subnets rely on a tiny number of validators, we're talking sometimes as few as 13 nodes sitting in publicly disclosed data centers, critics argue the network is highly vulnerable to targeted attacks. For them, this fundamentally betrays the core decentralization ethos of blockchain tech.
So the bear case really boils down to a few brutal realities. Think about it. What if the technology is wildly impressive, but the demand just never actually arrives? The total value locked right now is, frankly, abysmal. The daily active user base is hovering around 7,000 addresses, which is just a drop in the bucket compared to the top-tier chains. On top of that, the project is still dragging around immense reputational baggage from its pretty dramatic price crash after launching back in 2021. And finally, bears make the argument that Web3 developers are perfectly happy using Ethereum and traditional enterprises are perfectly happy using AWS. In this somewhat harsh view, ICP is just a brilliant solution desperately searching for a problem.
Let's bring this all together. Section 5, Evaluating the Investment, Weighing the Risk and Reward.
Here is the buy case. If you're going to take a long position on ICP, you have to fundamentally believe that technological superiority will eventually win out over early network effects. You're essentially betting that the self-writing AI apps enabled by platforms like Caffeine will completely shatter the developer barrier to entry, kicking off a massive, explosive adoption cycle. And crucially, you have complete confidence that the Mission 70 burn mechanics will execute perfectly, creating genuine token scarcity as enterprise usage scales up.
Now, the rational hold perspective demands a bit more proof. You might be super intrigued by the technology, but you want to see if that $20.6 million quarterly loss can actually flip into network profitability before you start committing real capital. You're probably happy sitting on the sidelines for the next 12 to 24 months just to monitor if active developer growth can truly outpace the big guys like Ethereum and Solana. You also want to see if this whole on-chain AI thing proves to be a sticky real-world utility rather than just another fleeting crypto narrative that fades away.
And finally, the sell case. You take this stance if you look at the massive gap in total value locked and daily active users between ICP and the market leaders, and you conclude that it's simply insurmountable at this point. The capital and the developers are already entrenched elsewhere. Plus, you might have the strong conviction that mainstream enterprise adoption is never actually going to require a decentralized alternative to AWS. Combine all that with an unwillingness to accept those subnet centralization risks we talked about, and the most logical conclusion is to just avoid the asset entirely.
So we've laid out the facts, completely fluff-free. ICP is attempting something incredibly audacious here. They want to completely replace traditional cloud computing and host the AI revolution entirely on-chain. But at the end of the day, you have to ask yourself, in a world completely dominated by AWS and heavily guarded by Ethereum, does superior technology actually guarantee a victory, or is the war for the decentralized web already over? I'll let you weigh the fundamentals to guide your own thesis.